What is up, everybody? Happy Monday. Welcome to the Premium Pirates YouTube channel. We're going to dive in today and do some options wheel strategy live trading. If you're new to the wheel strategy, this might be a little complicated for you, but follow our channel, check out some of our videos. They're going to show you how to get started and basically, some beginner concepts that will really help you get up to speed quickly. These live trading videos are super helpful. They're going to show you how to take all these principles that we're trying to teach and put them into action to really fully run the wheel strategy. Make sure you not only follow our channel, but head over to premiumpirates.com. We always use this on our live trading. It's a free 14-day trial. It's going to be fully functional. You can try out everything as much as you want and see how it works for you. It's really going to take the things that you're doing with the wheel strategy to a completely different level. So let's go ahead and dive into the market. All right, so the market's only been open for a little bit today. I have some covered calls that expired worthless on Friday. It's Monday morning. I always want to make sure that any stocks I own when I'm running the wheel strategy, I have a covered call on them. Currently, I just don't want to have an asset that's going up or down in price that that I'm not making money on. So on Friday, I had a couple positions expire, covered calls. One for MGM. I had one for Snapchat. I had one for Intel, and that was it. And I also had a cash secured put for Pinterest that expired worthless. I think if you watched my Friday video, that was one that I was just going to let expire. So it expired worthless. So the cash I had used to secure that put was released, put back in my account. It's here rolled up in my buying power. So let's go ahead and sell these covered calls, starting with MGM. So, you can see I'm down 2.6%. because it is currently trading at $34.09 and my average cost was $35. So it's pretty close to what I paid for it. Obviously not quite there yet. We wanted it to close above 35 if we could, so my shares could get called away and all this money would have been released and we could have gone on the hunt for new positions. But it didn't. We're still close. We should make some money. We're going to trade MGM options, sell a put. Let's look as close in the future as we can. My cost basis was 35. Sell, put. Oh, I want to sell call. 35. That's a pretty good premium there. Yeah, that is an extremely wide bid-ask spread. 71 bid, ask is 91. I wonder if it will even let me split the difference of those. Let's see if I can do 0.8. Maybe do 0.81. It's $81 in premium. I may not get filled. Let's keep, oh, wow, filled. Okay, that's another $81. So if I look at this campaign that is currently running in Premium Pirates, you can see that my cumulative net premium has been going up. I haven't updated my account yet today, but since this call that I was short had expired, and I just added another one, you're going to see another $80 of net premium added to this. For the life of this campaign that's been open, since December, I've had an actual return of 3%, an annualized return of 20%. My adjusted cost basis, if you were to take, okay, what did I actually pay for this stock, and then take into account all the premium I've gained for it, my adjusted cost basis all the way down to $33.92. It's even going to be lower now that I made another $80 in premium. But, this is pretty good. If we can get, annualized returns of 20 plus, that's great. With the wheel strategy, the way we're typically targeting things, it's like 2% a month. We want to net out to like 15 to 25% for the year. So this one's on track for where it should be right now. Hopefully, MGM stays the course and bounces all the way back to above 35. I'd love to get my shares called away this Friday if we can. All right. The next thing we have in here is Intel. And I have 200 shares of this, so I'm going to need to sell 2 contracts, not one. Okay, my cost basis is $20. Currently trading just shy of $20. Another thing that you can do with the wheel strategy screener is if I go here and I'm going to reset everything. Okay, I go to advanced settings. All right, everything is clean, but I'm going to limit my symbol to just Intel. All right. And I want a strike price of $20. I want it right at $20. Okay, and we're going to look for calls only. All right. And what I'm looking for here is what is the maximum annualized return I can make from this sale of this covered call on this asset. Okay, so currently it's the coming Friday is the highest return, which is to be expected. But it's just another way that you can actually use the Wheel Strategy Screener as a covered call scanner as well. It's going to tell you how to maximize your premium on both sides of the trade, on the cash secured put and on the covered call. So let's go ahead and sell this put for Friday at 20 bucks. Actually, the premium here is jumped. I'm going to guess this is a bid-ask spread issue. No, not quite. Is this one just jumping around? Okay. So this one's even more. Remember, I have 200 shares. Oh, wait. I already have another covered call open on this, don't I? Oh, I have 200 shares. Sell a call for the 14th at $20. I wonder why it's saying I only have 100 shares here. I have to look into that. Oh, 200 shares available. There we go. I was just looking at the wrong setting. Bid-ask spread is tight, so we're going to go at 36. Boom. That is another $72 in premium. Pretty good morning so far. Just a couple trades and already made, over $150 for the day. And again, if you're not familiar with how options work, that premium is mine to keep, right? That is actual profit we've made, actual income from the holdings. Okay. And the next one I had was Snapchat. Now this one you'll see is a little different because I still have one cash secured put open on this. So my cost basis right now is $11.75. I have 200 shares. I had sold two different cash secured puts at different price points, different strike prices, both of which I ended up getting assigned on. And I have another one open as well, obviously at a lower price point. This one doesn't expire till May, so I'm not going to panic just yet. So let's try to sell two covered calls at a strike that's above my cost. So let's flip over here. Let's limit this to snap. I very highly doubt that there is a strike at 11.75. Maybe there's an 11.50. Let's do that. $12. Yeah, so it pulled up all these 11.50s. We want to be careful here because this premium is not even a 1% return. It expires Friday. So the real one I want to look for here is probably this guy. This strike is $12. It expires on April the 24th. It's a 9.3% return, 41% annualized. Let's look for that one. Let's sell two calls on April the 24th. I don't have that date available to me on here. Let's adjust this real quick and let's find some other options. May 16th. Much better. Oh, I'm sorry. The earnings are the April the 24th. I'm just looking at the wrong column again. It's Monday morning. I'm having a slow Monday morning, I think. All right, so May 16th at $12. And that premium is nice. Wow. I got two shares of this. And so here it's showing me the premium of 112. Look at the bid-ask spread. I got 109 to 112. So even if I go to 111, I'm probably going to, maybe 110, I'm probably going to get filled on this. Let's see. Yeah, we'll leave that open for a bit and see if it gets filled. The next thing I want to do on my Monday morning, right? I really look at this pretty much every morning when I am doing some active trading. Anything that's reached 80% profitability, you can probably just go ahead and try to buy it, buy to close. So this K-view is looking close. This gold one I tried on Friday to buy it back because I'm at 90% profitability. All right, so bid-ask spread is a little bit wide. My average credit was 32. Even if I close it at 5, it's still going to be, let's go ahead and close this at 5 cents because I think this one will only let you price in increments of $5. Okay, that one. So it's going to release that cash that I had to secure that put. And it's going to be available for us to find some new positions as well today. There it is. You see my buying power just went up. Is there anybody else in here that needs to be closed? All right. So we're going to let this Snapchat, if this doesn't fill, I'll adjust my limit price later today. We'll see. Okay. So back to the options scanner. Let's set this up the way that we want. We want popular wheel. We want minimum return of 3%. I don't have an annualized return filter in there just yet. Now, the reason I'm looking for 3% now instead of 2% is just because I have not been active trading as actively recently. Like I said, I've had a lot of the other things going on. And so when I do spend the time doing this, I would really like to get as much premium as I possibly can. High end of the strike price at 35. I want market cap of large and mega cap only. So it's 10 billion plus on market cap is what I'm looking for. Max delta, 0.3. Make sure you take this snap filter. And this is how I set up my screener. However you like to, if there's other things that you're looking for, like IV percentile, like obviously there's other options that are available to you here. This is just the way that I like to set it up. Okay. And if you watched on Friday, I opened up a cash secured put on Moderna right at a $30 strike, which if you're looking at my account balance is, close to 5%. I only deploy capital at 5%. I'm certainly not going to open up the same position. So for now, I'm going to exclude Moderna. I want to exclude here in this filter instead of hitting this hide, because if you hide this, it's going to hide it from all of your future scans. We certainly don't want to do that. We like this position. We just don't want it for now because I already have it open. I already have enough cash secured on that asset to where I don't want it to grow to 10% of my portfolio just yet. All right. Warner Brothers Discovery is the next one that's coming out. So I do have some risk open on Warner Brothers Discovery. I'm currently holding 300 shares with an average cost of $11. It's trading at around 10.14 right now. And I believe I also have one cash secured put open on this. Yes. So my overall risk is okay. I could probably, I'm looking at the strike price to see, what my open risk is here. So let's look at Warner Brothers Discovery. So I currently have 4,200 in open risk. Do I want to put another 900 on? I think that position was pretty, yeah, see here, but I don't have earnings filters on. And the fact that this expires the day after earnings makes me a little bit concerned, considering I already have quite a bit of open risk on it. The IV percentile is not bad. Okay, we're gonna hide this one for now. Okay, rocket. Okay, so 2-star discount to fair value. I have a little bit of risk open on this guy. Make sure I don't already have this. So I already have this position open. You can see that even when you have the wheel strategy screener, there's just a level of work you have to do to find good positions. Without this screener, I mean, finding this would be next to impossible. Finding all these positions with this higher premium, because you'd have to do all the research yourself and then make these decisions that I'm making, like looking at earnings and deciding if this is worth the risk. But this just really accelerates the process. Okay. So this one's interesting. Norwegian Cruise Line. It's a 2-star discount to fair value, right? Assuming that Morningstar is still 31.50 fair value. Okay, so it's trading below fair value, which we always like. I have less than 5% open on this, and it's actually got the week before. So my expiration here is March 14th. This is a March 7th expiration. It's going to be after earnings again. But the IV percentile, IV and IV percentile right in the middle. Okay. This is pretty good. I think I'm willing to open up a little more risk on this because the strike is lower. The IV looks good. The earnings sometimes scares me, but the delta, again, we have it below 0.3. So it's 60% annualized return, 3.3 actual. Hard to pass up. Okay, so we're going to sell a cash secured put on March the 7th at $25. Again, confirming the delta here is right at 0.3. We want to double check this premium though. Okay, so I've got 78 here and 82 here. Okay, so we got a wider bid-ask spread from 78 to 86. So I want to enter at 82. I want this actual 3.3%. I'm going to let that go for a bit and see what it does. All right, so how much buying power am I down to now? Okay, so I still have 2,200 in buying power. Let's go ahead and hide this guy. Intel is 1850. So let's see, where am I at with Intel? How heavy am I in Intel right now? Again, just like even knowing how much open risk you have in any one instrument without having to calculate it by hand. If you've tried to run the whale strategy with a spreadsheet, you don't know the pain of this. This is so much easier. Okay, so I'm a little bit heavy on Intel already. I'm not really ready to. But this might lower my cost basis. All right, so let me tell you why I'm considering this one, even though I have a fair amount of open risk. All right, so it's trading at 1983. The fair value is 21. So we have a 1-star discount to fair value. It's not a deep discount, but it is a discount nonetheless. My cost basis right now for the shares that I already hold that we're selling covered calls on is $20. If I sell another cash secured put at 1850, which is still a delta of below 0.3, but for whatever reason, if Intel starts to move against me, and I do get assigned, then it's going to lower my average cost basis. I'm still going to have quite a bit of risk open on this, but I will be able to sell covered calls at a lower strike price than $20, which I do now. And these have been pretty lucrative. You saw we were in this earlier. This expiration is before earnings. I think I'm ready to open a little bit more risk on this position. So let's sell a put on March the 14th, 1850. Just double check. Delta below 0.3. I'm looking for 57 premium, which is in the middle. Hit the sky, and we're filled. Another $57. What I'm going to do next is go in here and export my transactions so that I can keep my wheel strategy tracker up to date. I just want to know how I'm doing all these campaigns. Another thing we tipped in on Friday that I just want to show one last time before I go for the day is this Walgreens position that I have open. Currently, I'm down 16% on this position. And I think that this is going to be one of the criticisms. If you watch other people's YouTube videos on the whale strategy, the criticisms will be, oh, they only show you the premium. They never show you that they're actually underwater on anything else, right? But I actually am. I'm down, 15%, almost 16% on this Walgreens position. Granted, it's only 100 shares, but nonetheless, we are down. Wheel strategy campaigns can go on for a long time. It is not impossible for a campaign to go on for like a year. 15% loss is sort of an inflection point for me. I might consider opening more risk on this. I might consider selling another cash secured put, assuming that all of the research I do still aligns, right? It's trading at 10.10. The fair value is $20. So it's still at a pretty deep discount to fair value. And I do have another cash secured put open that expires not this coming Friday, but the following at a strike price much lower than my cost basis. So if I'm looking at my adjusted cost basis on this, it's $10.99, even though my actual cost basis is $12. I mean, I've made pretty good premium. My 3% actual return, 30% annualized. I'm not quite ready to call this one a dud just yet. Obviously, I was opening more risk on it, and I'm still not even at 5% risk. All right, and so that's a pretty lengthy trading session for this morning. Good Monday morning. Made quite a bit of premium there. You'll see this calculated when I update my wheel strategy tracker. It'll show in the total premium collected, and we'll keep plundering premium. If you haven't already, go over to premiumpirates.com, sign up for a 14-day free trial. Obviously want to try out these tools for yourself if you're just learning the wheel strategy, or if you've been doing it for a while and you really want to elevate what you're doing and be able to get more income from your positions. These tools are going to help you a lot. Like I said, try it free as much as you want. It's unlimited. If you have any questions, certainly put them in the comments. I know that some of these topics are advanced. We're talking about bid-ask spreads and some of the Greeks. And if you're new to the wheel strategy, this can be fairly overwhelming, I think. We really want to simplify it. There's other videos on the channel you can watch that are going to help you get started. And if you have questions that you drop in the comments, maybe I can make an entire video or just answer them individually in the next video. Appreciate everybody watching. Until next time, get out there, keep plundering those premiums, and make sure you follow us on YouTube for all of our upcoming live trading videos and other educational videos that we're going to post. Appreciate it. Have a great week.